Welcome to the Chrisman Commentary, daily mortgage news podcast. I'm your host, Robbie Chrisman. Topics on today's episode include active listings in America, my interview with Salt Lending's Shawn Owen on how digital assets like Bitcoin are reshaping mortgage lending, and what's up with the lack of market movement despite all these geopolitical tensions. Thank you to True and its Mortgage Operations Service, or MOS platform, which transforms borrower documents into instant, trustworthy data for real-time decisioning. True cuts time to critical loan events from days to minutes by using background AI workers to instantly validate data and automate underwriting decisions. In Spain, Spaniards are shooting water pistols at foreigners to protect the impact of mass tourism, and it's actually created somewhat of a housing crunch. Tourism here in the United States is down considerably, especially from Canada, impacting the economy here and on Oahu, where I am today speaking at the MBA Hawaii annual event, one of my favorite conferences, and also other locations, obviously. But in the U.S., the inventory of properties for sale is increasing, and the market has turned for buyers at the expense of sellers. New listings rose 5.2% year over year, and active inventory is up almost 28% year over year. Days on the market have increased by 6 days, but home prices are essentially flat. Sellers at the lower end aren't budging, yet at the higher end, LOs tell me that the market feels heavy. Speaking of heavy, markets were relatively subdued to open the week, despite a swirl of global headlines. With few major economic data releases, much of the market's focus shifted to geopolitical developments and upcoming Fed policy. Stronger than expected retail sales from China and Iran's reported effort to negotiate a ceasefire with Israel drew investor attention, though the reaction was muted. Domestically, a weaker than anticipated Empire State Manufacturing survey for June initially hurt investor sentiment, but there was some reassurance in the form of a 20-year Treasury bond auction that drew decent demand. The end result? A yield curve steepening trade that saw more weakness in long-term Treasury yields than short-term ones. All eyes now turn to today and tomorrow's Federal Open Market Committee, or FOMC, meeting, where policymakers are widely expected to hold rates steady. With the federal funds target already viewed as being in a good place, at least that's what has been inferred via public comments from FOMC members, the Fed is likely to repeat its cautious stance, emphasizing patience while it assesses how tariffs, tax policies, and global uncertainties affect the U.S. economy. Fed funds futures are pricing in near certainty that rates will remain unchanged, and with the dollar weakening slightly, inflation staying persistent, and no major shocks to global energy supplies, there's little urgency for the Fed to adjust course at this time. For today's interview, I wanted to welcome to the show Salt Lending's Shawn Owen to talk about how digital assets like Bitcoin are reshaping mortgage lending, from collateral risk and fraud prevention to construction financing, regulatory hurdles, and the future of tokenized mortgage markets. He's been an advocate for Bitcoin since its early days, almost 15 years ago, and has always been at the forefront of innovation in the crypto space. With over 30 years of experience in business operations, he has a keen understanding of technology, capital allocation, and fostering growth. And as the current co-founder and CEO of Salt, he's helped revolutionize the idea of cryptocurrency-backed lending. Digital assets are reshaping mortgage lending. And I've learned throughout my tech career that there's a bleeding edge and there's a leading edge. And it seems like we made it kind of past the bleeding edge to this leading edge now where these are becoming more and more accepted, more and more mainstream. And it's pretty neat to see that. And obviously you're an expert in this space, but mortgage lending, and I've kind of been a lifer in this space, it lives and dies by collateral quality. And so when the pledged asset is Bitcoin rather than a house, there's alternative risk metrics or kind of ways that credit committees or underwriters can be convinced that a borrower is creditworthy. And so let me start by asking you, when it is one of these digital assets, what is convincing to underwriters, or I guess eventually the rating agencies, that this collateral is really protecting the loan?
Yeah, it's a great question. And just for context, before I got into Bitcoin, before Bitcoin existed, my entire career had been, for the most part, related to or directly related to real estate and investing in real estate, managing real estate. and all of my investments were there. I managed facilities. I was involved with building out, commercial sites. That was the path I was on. That was my background from my family and everything. Come along 2008, it kind of shook me up a bit, like most people, rethink things a bit, kind of started looking at other alternative forms of education, let's say, started thinking about like the stock market and other components. And then that really kind of set me up to be early to hear about Bitcoin. Bitcoin at first kind of glance was interesting, but then maybe a couple of days into it, when I really started thinking about it, kind of had this eureka moment of, wow, this would be incredible. But again, it was like 10 cents, were not arguably worth anything. Couldn't find real people that I could meet to talk about it, couldn't buy it, couldn't do anything with it. And so it was really just concept. And then as this continued to grow, I started to really believe that it would be a currency, and that it could be, or if it could be a currency, it'd be great. As that continued to progress into 2013, 14 area, it started to become extremely clear to me that it was going to be a commodity currency, some type of asset that people would save. And it has definitely taken that path, and I would say become a global store of value, kind of savings technology, a form of collateral. I really felt like my personal itch to scratch, and the problem that I was seeing that everybody needed was not necessarily to buy and sell and trade, but it was to use it as collateral, right? You can go to the bank or you go get somebody to underwrite credit for everything, including even a promise to repay them off of your ability to work, right? So like lending is the biggest form of the current of money, I would say, that exists. I would say money is lending. And so like as you look for collateral, and I'm going from a real estate background of thinking about this all the time, about how you do personal guarantees, how you go to get banknotes, the mezzanine, the different private rounds. I'm looking at this thinking, this is the best version of collateral ever. Like people just don't see it yet. And then I started advocating for that. And so like with this, it was starting salt becoming predicated off of the idea that salt was historically how people preserve their wealth. It's really along the lines of Bitcoin equals, we don't know what it is. It's a commodity, it's currency, it's something, but it preserves wealth. That turned into this hyper focus for now over a decade plus of just thinking about risk management and how to effectively save Bitcoin, which is not as easy as people think. It's not so easy still today even, but the tone has totally changed. Now we have currency. We have everybody from sovereign nations to the president of the United States and everybody else saying, hey, this should be strategically saved as an asset. I believe that will create a credit market, and that's why I'm building what I'm building. But if you think about how to manage the risk, it's very different in one regard, but it's not different at all in another regard. So you think about like a promise to repay, a security interest, a deed of trust, a legal agreement, something where you've notarized and said, hey, I'm backing this promise to repay this person. That's kind of the underpinning thing of the whole system of property rights, UCC rights, and everything else that you would say is needed in order to have an orderly market with real estate or anything. Bitcoin blew my mind in that I thought and saw the potential for this to be programmable without an escrow, without a bank, without any counterparties, just people and or entities then putting this up and lending against it. And it became clear to me like, okay, we're gonna have to manage this from the risk perspective. Everybody I talked to didn't believe it from the banking side. They're like, what if it goes to zero? So all we did for like 3 years straight is figure out how to like liquidate this stuff instantly, which quite frankly is exactly the opposite of what everybody wants. Although it would protect the lender in the worst case scenario, in the mortgage real estate, that's not really what banks want to do. They don't want to just liquidate everything when the prices are down, right? If people saw real volatility. And so now we kind of have three ways of mitigating the risk. And one of them is very traditional to what you'd be used to in normal property rights, just promise to repay, security interest, pledge to promise, SEC or UCC filings. That also allows for us to disconnect the market in a way and say, hey, you're basically going to insure this and have a way that you've got enough collateral that there's no liquidation risk. In the middle, there's actually people who want to be liquidated because they're thinking about it more from a market, and they're saying, well, if it does go down further, at least I got out at a certain place. They're still kind of more on the dollar side of it. Maybe they're using it to collateralize buying real estate, which is very common, probably something we'll get into. And then we have the ability for something in the middle, which is just make a margin call, just get somebody or yourself to give us some extra collateral over some period of time, and we keep on moving. We have 100% repayment rate, no defaults ever from the lender side. So we've successfully shown that this is great collateral, right? Although I still think the world is kind of coming around to how to manage the risk and think about it in the same light that we do with all these other assets like real estate. it's kind of a long answer, but I feel like there's a lot in there that is relevant to your question. It's an excellent question.
Well, thank you for saying that. Yeah, I come from the capital market side of things, and I have thought that using the blockchain for secondary marketing functions is an incredible use case because
Mm.
you don't need this huge paper trail. There's provenance right there on the blockchain. When you trade it, boom, there's everything you need right there along the blockchain. It's neat to see you come at it from the primary side, the origination side.
Yeah.
Let's dive into that. We are seeing more wire fraud losses. We are seeing delinquencies start to creep up with some of these traditional ways that assets were pledged or are pledged. When it comes to
Yep.
blockchain anchored audit trails or smart contract escrows, plugging in today's title and settlement workflows or whatever it might be, can you talk about why the funds movement is safer for both lenders and borrowers when it comes to using some of these digital assets?
Yeah, definitely. And as a side, actually, one of the comment you just made about the wire fraud was one of the podcasts previously. I can't remember exactly which one, but there was one where you were speaking to somebody very intelligently about this problem of wire fraud, right? And this is a problem I understand really well. And I think that's one of the reasons I wanted to reach out and have this conversation with you, is that it seems like you are definitely understanding kind of this intersection of what blockchains could do with provenance and tracking. I spent like 4 years and a ton of money building what I think is coming in the future of tokenization of everything, which is really another way of saying, like, if this is true, that this works for Bitcoin as store value, and if this is true, that we can have this settlement layer that has no counterparties, not the same type of counterparty risk that's, in like many, many, many orders of magnitude more efficient than the current system, then it's probable that real estate and every other kind of asset is going to end up there at some point versus the county records office where you have to notariate, scan, write the blue ink, go get somebody to ship it, and then double verify. Takes forever, right? To take on or off a pledge, where on a blockchain, you have this amazing quality in that if it's done, it's done, right? Now, there's a new paradigm of risk that comes with that, right? That I think is still in the process of being solved for, and there's scaling things that will get solved. Really, it just kind of is a learning curve, I would say. But the easiest way I think about it is like escrow. The escrow serves an excellent function where you have a third party that's there just to arbitrate in the situation that something needs it. In say wire fraud, like that's not a thing in a blockchain if done properly. It's basically impossible, right? It introduces the same kind of problems where somebody could fat finger a wire and make a mistake. So you still have to be very careful, and you need second forms of governance over it. But the truth is that it solves, like, I think, more of the financial world's problems than people can really wrap their head around. When I do this exercise and I think about it, I'm like, okay, so if you compare this to banking infrastructure, the force that's required to kind of spin up all these businesses, all the county offices, all the paperwork, all the scans, it's like we're not even talking the same reality at all. We're talking hyper efficient comparatively to that, because it solves so many problems. Now, that sounds kind of like panacea when I say it. It sounds kind of like I'm overhyping and selling something, but and I don't believe we're there yet, but let's say that all society just wanted to implement and start putting this there. With what we've already built in infrastructure, with the banks, with PayPal, with all these tech companies, with what we can do, I really do believe we could radically improve the efficiency of settlement, title, fraud, you name it, because we could use this method of even up to 10 minutes. Like 10 minutes seems like a long time when you want something right now. But when you're talking about settlement that's final, that's nothing compared to 90 days, and like all the fees that go along with the time value of money lost. So, I mean, that to me is a huge indicator that we are definitely and should be heading in that direction, even if it takes a while for like old regulations, which I would say the two things really preventing this is education and the lack of good regulation, which then creates fraud and bad actors to have an ability to kind of come in and play around in the fringe, right? But as soon as that starts to go away, which I feel like is happening now, we can finally start to build out things in a way that leverages those benefits.
Yeah, there's still definitely gaps in education. However, it seems like
Fun.
acceptance is building. And even if
Yes.
you and I see this as a incredibly viable future of finance, the industry might not be fully there yet. And I think some skeptics would tell you that it's still such a volatile asset class.
Right.
Obviously, the other asset
Volatile to
classes,
what though?
based on what's been going on with geopolitical headlines, other asset classes have become pretty volatile too. But when it comes to managing this price volatility, uh,
Yeah.
Can you talk about how that's getting better and better? Obviously, no lender wants to end up underwater having to sell loans
Right.
for 96 cents on the dollar, that sort of thing, because
Yeah, it's not good for anybody, really, right? Like maybe there's a case for volatility, right? Volatility can be your gift if you're in the position to be buying strategically and or if you're in the market as a trader, right? It creates a lot of liquidity. There are benefits to volatility, so it's not necessarily that it by itself is a bad name. I think what's really interesting, are you familiar with kind of the concept of stable coins?
I
A
am, but
little
it might be
bit.
worth explaining to the audience slightly.
Yeah, yeah. So for anybody who's listening to this, like in this context of volatility, there's this term called stablecoin that came out of basically issuing a token and or what I would call an IOU, a representation of something, just like what the bank does when you give them your money. They give you an IOU on a dashboard or something that says, hey, there's a receipt. You believe it is a dollar and we treat it as a dollar, but technically it's a IOU or a stable coin or a promise to give you back the thing that's a bearer asset. In cryptocurrency, that's been termed, and I don't really love, I actually hate this term, a stable coin, where I think it's just like a early concept that kind of got stuck and never got rebranded, which has been true of a lot of things in crypto. You have to think about it a bit more to say, like, what is this thing? It's like, okay, there's something that is like this already in the world. But, ironically, if you think about volatility, I don't believe anything is actually stable yet. We live in a world here where we're talking, at least where I'm at, where I speak English and I think in dollars, even if I try not to, right? It's hard for me to go learn another language and it's hard for me to use a different denominator to account for because everybody else is using the dollar. And when I'm out purchasing things or buying things, I'm asking questions in English. So when you think about changing that paradigm and you say, well, what's actually the stable thing? I would argue Bitcoin is the stable thing and that it looks very volatile next to what we're used to thinking as the stable thing. Once you use the denomination of everything else globally, right? It's like you go, let's add in the bond market, let's add in the different currencies everywhere. Let's add in the trading derivatives and imagine if housing markets were completely live tracked in real time, like people would freak out, right? So there's a benefit in kind of abstracting away that volatility for people who don't need that. And to your point, nobody wants to have a valuable asset get liquidated just because some paper trading somewhere printed a number that then freaks people out when the real liquidity may be nothing like the case and maybe the real way to cure it isn't the case. And so like we've been innovating a ton on this. This is actually something that I'm very passionate about right now because I lived through and had to be the one kind of pioneering liquidations that were automatic of Bitcoin. That was what everybody wanted to believe that had to exist. And it kind of did in a way, but I actually don't believe everything should just be liquidated automatically at a certain price point. I think that's a terrible idea. I think I've seen a lot of people lose money for that. And so, we've built a process and a way for people to basically opt out of that and kind of have the best of both worlds. I would say if you have an asset that does not want volatility and you're not looking to get in and out of it, you're looking to hold it long term, which is most of the time what people are looking for in Bitcoin and or I would say in real estate is you're thinking about it as a long time horizon. How long am I going to hold real estate? I was always of the mind that if I wouldn't be happy holding it for 10 years, I shouldn't own it at all. And so over that 10 years, the last thing I want to worry about is the price going up and down in the bank, getting ready to liquidate me and boot me out. Like that would never work. So it's heading in the right direction with cryptocurrency, although I think we still have, again, education, adoption, good rules, people understanding this is not the same as what we're used to with margin accounts with securities. It's similar, but it's not the same. It is, in my mind, most similar to real estate. It's the one asset on the planet that I would say, even though gold has become the easiest way to talk about it, and it's true that it's more like a commodity. I feel like it's more applicable to think about it like real estate
Yeah.
in that, you don't really want that volatility if you're trying to buy and hold real estate and build real estate, digital real estate, if you think of Bitcoin that way.
Let's talk acceptance though, because I go to conferences and the people running these companies have been in the mortgage industry for decades, and they're obviously of the little older subset or demographic, if you will. Do you think there are reporting standards or legal structures that will make digital asset collateral more palatable to warehouse lines? Or, eventually
Yeah.
the GSEs, and I'll get to where you think this is headed. But what will it take in the now to get more acceptance and use of what we're talking about today?
I think what is needed still from today, because I agree with you, I run into the same things. We just did a large press release and we're working on something where you take real estate and Bitcoin together we think there's a way to augment and improve real estate transactions with the use of Bitcoin. And that's like a whole thing we could talk about that's kind of fresh on my mind. But what is needed is both better understanding of just simply acceptance that this is a collateral form that you can use, like real estate, for example. I think the real friction is at the title companies, and just for think about all the transactions everybody's used to doing in the warehouse, the facilities, and everything. Well, it's all fundamentally still built up upon the institutions of county government, property rights, a lot of this law that we have that goes all the way back to Magna Carta. And it's still very slow, and it's very paper, right? And if you go to other countries, it's even more so, right? Because they might not use DocuSign or things that we kind of even get a little bit of a benefit of. A lot of places in the United States and counties still won't accept a DocuSign. Like, you have to actually get the mail to deliver a piece of paper that, in my mind, is less uh, truthful and easier to fraudulently convey than a DocuSign. But we're still going through this what I would call generational gap, maybe. And plus, it's that old adage: if it isn't broken, don't fix it. Like, it is. I'm not saying the system that we have is broken. I actually think it's very good, just not in comparison to what it could be. Right. And so getting people to think about the future usually entails them thinking, well, am I taking some kind of risk? There's an unknown, and the unknown is scary. I think if we simply have the conversation and allow for businesses, especially in this business of property rights, UCC, title, to really start to head that direction, it will eventually get there. But it's a lot of rules that have to change, because the title companies are doing things away often because of some rule that exists at some small jurisdictional level that rolls all the way up to the state and federal, right? And so it's a complicated problem to solve right now. I think it's really just a matter of implementing and really allowing for good companies to do this, and to getting some more headlines with this proven out that it's, hey, this has got the blessing. You're not gonna lose your money, go to jail, or anything else bad. This is okay. And I think we'll start to see the progress. And I do believe it's something that's gradual, then suddenly. Like, if you go back to the inception of Bitcoin, and even before that, there's like decades of technology that led up to that concept finally being able to be empowered. We could see a long tail still of where it's going from today, but I believe we're getting to that inflection point where it's starting to become accepted, and then I think it will go very fast. And in fact, maybe I sometimes worry it could go too fast. So I do think there's some prudence in just making sure that it's done correctly, and that we're actually going through the process for people to educate it. Last thing I'll say on this is, like, I have a 10-year-old daughter, and I think about how crazy different it is for me in only a couple decades from what I was when I was 10 years old, and the way the world was. And she's going to grow up just, this is normal. This is just like, what do you mean you did it that way? And so I think it's important for people that are maybe thinking this doesn't make sense to me, to just recognize, if you were to learn it as if you were 10 years old right now, it probably would, right? And if you can convey something in those simple terms, it might actually be simple enough to make sense. So a lot of this is just having conversations like this, probably, and then demonstrating it in practice.
Yeah, my whole life I've enjoyed being a millennial, where it's like I grew up with VHSs and cassette tapes. I still remember putting those things into the slots to,
Oh yeah.
and like a hard drive, USB type of thing to have my schoolwork on the computer. But it would be nice in a way to be fluent in this, like the younger generation is. I'll give a word of caution though. If I know anything about the mortgage industry, there's a long tail when it comes to technology. So look, I
Yeah.
want the inflection point to be here, and I want it to happen fast. But history says that might not necessarily be the case. When we look 5 years out, and obviously, Salt was the original Bitcoin lender. Y'all started 2016, so you've been doing this almost a decade. But when things are evolving much more rapidly now, acceptance is evolving rapidly. It's cool to talk about these things with you today. People are nodding their heads versus scratching their heads like they would have even a couple of years ago. When we look into the future, a couple years out, 5 years out, how do you see kind of this tokenized mortgage? Eventually, with they get pooled, and it needs on-chain proof of reserves and those sorts of things. How will it change pricing of mortgages or pricing credit risk?
Mm.
I would think that this will eventually be able to compress rates as we have a better picture of what borrowers' credit worthiness is. But how do you see it evolving over the next several years here?
Yeah, that's an excellent question with the take on the end of how it will impact the pricing in the market.
Mhm.
So I would say, generally speaking, it is so hard to project out what 5 years looks like.
Mhm.
I've been somebody who has always thought in the future. I've seen things, and then I've often misgauged it. To your point, I've thought this is imminent, and then it takes 5 years, 10 years, right? And so I've also been on the other side of it where I see things that happen much faster than I would have projected. So I
Mhm.
think just looking at how long something will take to get to a certain point is very hard. And I don't believe most people can get out more than maybe 12 months, in any real accuracy. However, if you think about, forget the when, and you just look at the if, I think it's inevitable. And then you say, well, if it is inevitable, when that happens, what are the implications and the impacts? And that's why I like this question so much, is that I believe anytime there's efficiency gain, right? Like, so right now I sit at the intersection of tokenization, regulation, and AI technology, right? That's what my whole life is consumed around. And seeing the rate of progress with AI and compute is really astounding. It's the only other thing I've seen in my lifetime that got me kind of to have that moment like Bitcoin did. There's only two things: Bitcoin, AI chatbots, right? So like those two things have kind of made me feel like the game changed. And then the question is, how fast is it moving? Well, they actually have a very interesting effect on each other, where you have one thing that is infinitely scarce and provably real. Like, you can't fraudulently fake a Bitcoin transaction. Nobody's going to ever be able to do that. The incentives aren't there. AI is going through this problem of trying to figure out how to get to where it's believable, because it can create so much stuff so fast that it's the opposite side of the spectrum, which I find super fascinating. And both of those have a deflationary effect. One has a deflationary effect on productivity, and the other has a deflationary effect on the way that we convey and save energy.
Mhm.
And those are actually directly related back to large energy consumption and needing to be more efficient. And with Bitcoin, most people may have that have heard about some news headline may have heard bad information that it's very energy consumptive. But that's only if you compare it to what it's actually replacing, which is then suddenly like way worse. Same thing with AI. You look at this compute cluster and you're like, wow, we're just blowing all this money to build all these computers to do what? To chatbot. And but then when you compare what it's doing in the deflationary nature, it's profoundly more productive. So I believe I say those two things together with your question, because I believe productivity will always equal efficiency, and that markets will go where there's liquidity and where there's efficiency. People will always kind of find a way to opt for the value of time and money. Even if they want to believe in one thing, they may often just opt for the thing that makes the most dollars and cents, because we all have a limited amount of time. And so, I think that that confluence of those factors, we're going to see an acceleration of both productivity and deflation, and that is a good thing. I would say that's not a scary thing. That's a great thing. Now, if you overlap and say, how do we get the benefit of what we're talking about in, say, contract land, right? I think of real estate and or governments in general as a lot of paperwork, a lot of notarization, a lot of inefficiency. And for somebody like me, like one of my biggest pet peeves is having to go sign documents and then scan them back into a digital form and mail them and email them and all this stuff. I'm like, why didn't we just do a digital version? I think that is going to translate into what people should prepare for, is what happens when you can go do deals as fast as you can generate AI videos, right? Because we have proof of truth, which is really what the blockchain is, like a truth machine, which when you think about what is the whole rub, what's the issue, with wire fraud, with anything conveying title, everything is all predicated around how do we maintain the proper record and provenance of truth. Well, if we can speed that up to, say, near instant, I mean, everything else speeds up because of that, right? In the same way that if we can speed up productivity from, say, robotics and AI, well, then everything gets impacted from that. And I
Mhm.
think we are now talking about a world of abundance, and then there's something to be rushing towards if we're doing it right. Right now, not to say that there isn't risk in everything new. There always is. So I'm not making any future forward-looking statements or anything like that, but I do believe that that's what we're going to see, and I think that it's going to probably come faster than a lot of people will notice, until somebody creeps up on them. They're like, "Wait a minute! So Bitcoin is a thing, and wait, AI agents just did all this stuff on my contract, and it's done, right?" Like, I think that's coming, and I think it's going to be great. But I also think there's a lot still to build and do to get there. Question is, how much of it will you and I do, and how much will the robots do, and how much will Bitcoin do?
It's a good point. Yeah, it reminds me of one of my favorite quotes in economics, and that's by a guy named Rudiger Dornbush. And he says, in economics, things take longer to happen than you could think they will, and they happen faster than you thought they could. And it seems like that's
Totally.
what we're talking. This at some point it's going to be it'll just shift. How
That's right.
long it'll take to get there, especially for mortgage. When it comes to, this is a personal question, ChatGPT or Copilot, or there's one that has like a just a one first Claude's the
Yeah,
one
yeah,
I'm thinking of,
yeah,
but
yeah.
there's Grok, there's other stuff. What do you recommend somebody like me? I've just used ChatGPT because that's the OG and it does what I needed to.
Yeah.
What do you recommend?
So first off, I actually think ChatGPT, especially the pro version, although it's expensive, I think it's worth it. Like I really do fully believe that they are staying ahead of the curve when it comes to making the complicated stuff simple.
Mhm.
And I find that to be growing on a daily basis. I'm just starting to use ChatGPT Pro version more and more and more,
Mhm.
because the more you kind of understand how to use it, the more you get the models, the more you can connect it to other sources. It's really powerful. Now, that being said, I feel like each one of these is going to eventually kind of have its area of expertise. Like to me, OpenAI is really focusing on, they're going big. They're trying to say, how can we be the consumer version of front end to everything, but also allow developers to build on the back end? That's ambitious, right? And I find it to be valuable because I use it a lot. However, if you're coding, for example, Claude and Anthropic is better. It just is better. It's more of a developer tool. People are using it more in code,
Mhm.
and it is kind of carving its niche out where it's like, hey, anybody else Google, step up, but we're the best at this. And they have continued to kind of iterate. Google's like the sleeper. It's not good in Gemini, the one that you just get out of the box. I don't like it. But if you go into the back pro end and you get an account with them and you use like their Pro 2.5, whatever, max something, is very good. And so like with Google Docs, I found them to be good there. However, ChatGPT now has the ability to connect the dots on these. I would also say, just as a pro tip for me, it has spent a lot of time on this over the last 2 years. Once you get to a point where you've got a handle of something like ChatGPT or some tools and you're getting like workflow out of it, I feel like the big unlock is then getting in, starting to play around with something like Zapier or Make.com or something that automates, because that's where it gets mind blowing when you think about, well, I do this thing and it starts to kind of feel the same way every time I kind of run a transcript or whatever. What if I could just set that to where it happens automatically? Like my vision of this is, I get kind of passionate about it, so I'm building some stuff around this, is that we could have a call like this, like we could have a podcast, and we don't have to worry about the start and the end time or the processing or the stuff. It's like doing all the things while we're talking and like kicking it all out and creating the stuff. I really believe that's coming and should. And like your work will be happening regardless, based off of what you speak and then how you set your systems up and preferences. But it requires getting, either wait until OpenAI eats the world and Google and them compete, and we all have that, or use something like these automation tools, because they make it really easy to just say, anytime I get this email, go and check it for this. Like how I found your podcast actually was by doing some automation and saying, hey, I really want to go reach out and find things. This kind of who I am, this is what my company is, what would be a good fit. That found you, right? And then I went and checked out your episodes and I was like, yeah, it's a good fit, right? I would not have been able to do that on my own like 2 years ago. I
Well,
wouldn't have the
I'm
time.
glad you did. Very glad you did.
Yeah. Yeah, me too. This was a good one.
I certainly enjoyed this conversation today. I feel like you and I could talk for hours on this. So I look forward to having you back, hopefully in a couple months on the podcast. But for now, excellent discussion. Thanks very much, Shawn.
Yeah, this was awesome, Robbie. I really appreciate it as well. I could talk for a long time on this. It's been a great conversation. Thank you for the great questions. And I hope to talk to you again soon.
Today's economic calendar is fairly full between economic releases and treasury supply. We've already received import and export prices, with import prices flat, and retail sales, which were down 0.9%, excluding auto and gas, down 0.1%, both for May. Later today brings industrial production and capacity utilization for May, business inventories for April, home builder sentiment for June, and treasury activity that will be headlined by $23 billion of reopened 5-year tips and a buyback in 7 to 10-year coupons for up to $4 billion. Prior to the first day of the FOMC's 2-day meeting getting underway, the Bank of Japan will announce its monetary policy decision. We begin Tuesday with agency MBS prices better than Monday's close by 1/8 to a quarter, depending on maturity and coupon. The 2-year yielding 3.93 and the 10-year yielding 4.40 after closing yesterday at 4.46%. Let's wrap up with a joke and some housekeeping. Two men debate whether Hawaii is pronounced Hawaii or Hawaii. They ask a passerby, who answers Hawaii. Thank you, says the satisfied first man. You're welcome, replies the passerby. Thanks again to True and its mortgage operations service, AI Background Worker, which transforms borrower documents into instant, trustworthy data for real-time decisioning. True cuts time to critical loan events from days to minutes by using background AI workers to instantly validate data and automate underwriting decisions.